What's up, everyone? It's Levi from Wall Street Survivor, and today we're back with part 7 of our Survivor 101 series, and today we're talking dividends. So for today's video, we're going to start by going over what dividends are and how they work. I'll be sharing some of the best dividend stocks for you to invest in, and last but not least, I'll go over one of the best and most reputable dividend investing strategies. Thanks for tuning in today. If you like this video and you want to see more content like this, make sure to give us a like and subscribe to the Wall Street Survivor channel. But for now, let's get into it. Dividends are one of the most important factors of a company's financial operations, and they're also super important to be considered by investors. Let's start it off by going over the basics. Dividends are a part of a company's profits that are divided up and distributed out to shareholders every year. Every year, certain companies will decide how much money they want to divide up and keep as retained earnings and also distribute back to shareholders. The money they decide to give out to their shareholders, or the people that own their stocks, are called dividends. Then they take the dividends amount, they divide it up among the shares outstanding, and then each shareholder receives the amount equivalent to how many shares they own. So that's what dividends are. Now let's talk about how to work them into your investing strategy and what they mean for your stock portfolio. If you're interested in investing in companies that give out dividends, here's a few things you need to know. So the first thing you want to look at is, has this company given dividends in the past? Using a stock screener like the one at dailyfinance.com, you'll be able to figure out if a company is planning on giving dividends that year. Some companies have a tradition of giving dividends, but it doesn't necessarily mean that they're going to continue doing so. Check out the link in the description below to see our favorite stock screener and use it for yourself. Next, when you're looking at dividends and you find companies that you want to invest in that traditionally give one, you're going to want to check out their dividend yield. A dividend yield is the ratio of a stock share price to the amount of dividends that it gives out. Investors that are interested in dividend stocks look for companies with a high dividend yield because basically it means you're getting more bang for your buck. One quick warning sign that you want to pay attention to is if their dividend yield has increased dramatically, that can be a red flag. Think about it. If a dividend yield is just a ratio between how many dividends a company is paying out and its share price, if a dividend yield is increasing dramatically, that could mean that the stock share price is decreasing drastically. It's not always the case, but definitely something to look out for when you're looking for dividend stocks to invest in. So you might be wondering, if dividends are basically just free money for owning a stock, then why wouldn't I fill my entire portfolio with them? Well, there's a few reasons why. If you remember what we talked about earlier, companies that are paying dividends are taking money in excess and redistributing it to their shareholders. This is usually a sign that companies are well established and don't need to reinvest the money that they're giving as dividends. Many of these companies are known as blue chip stocks. Blue chip stocks are seen as safe investments that grow slowly over the lifetime of an investor. Most of the time, these are long-term investments that people are making not to make a quick buck, but rather to be invested with over a lifetime. This means that companies that pay dividends are slow-growing, mature companies that likely aren't going to see a skyrocket in stock price in the short term. So because these companies are slow-growing and mature, they offer dividends to investors in order to incentivize them to continue buying stocks. Many times, it's possible that you would be able to make more money investing in younger, riskier companies, and honestly, many of the times that's why companies that are larger and more mature offer dividends. Okay, so let's talk about some individual stocks that have a tradition of paying really high dividends. First up, we have P&G. If you want an old and reliable company that's going to pay 4% year over year, pretty traditionally, definitely check out P&G. Many of us know 3M as the mask company that came out with all the coronavirus masks, but one thing they're lesser known for is that they've grown their dividend for 61 years in a row. That's a pretty good sign that as an investor, you're going to receive high dividends from owning 3M stock. Then there's Lowe's, which over the last 10 years has an average dividend growth rate of 18.5%, which is massive. And lastly, we have some honorable mentions from Motley Fool's list of dividend kings, best stocks to buy and hold forever. These stocks include Coca-Cola, Colgate, and Johnson & Johnson. Alright, and last but not least, like I said, I'll be sharing one of my favorite dividend investing strategies, and this one's called the Dogs of the Dow. The idea of the Dogs of the Dow strategy is that you organize the Dow Jones Index by highest dividend yields. You take the top 10 dividend yield stocks out of the Dow Jones Index and invest in those for a year long. Like I said, dividends change every year, so this is why you'll buy and hold for a year at a time. Every year this list resets, but it guarantees that you have a list of reliable companies that pay high dividends to invest in throughout the year. As always, there's no perfect answer, and I can't tell you what strategy is going to work best for you. But if you're interested in receiving dividends from your investments, hopefully now you understand a little bit more about what those mean and how to reap the benefits. Let me know what you guys think about this strategy and dividend investing in general down in the comments below. Thanks for tuning in today. Make sure to subscribe to the Wall Street Survivor channel for more videos like this coming soon.